The global M2 supply, that's the bottom pane, it started to tick up on January 13th. And typically speaking, there's a lag of about 70 days or so before it starts to pump the price of Bitcoin.
How long will this pain last? That is the main question that is on everybody's mind. When are we going to get back to the days of the bull market? That is what everyone is expecting. But reality is that's not what's happening. And a large part of that is because of all of this tariff talk that Trump is talking about. Now, in order for us to understand or have an idea when this can potentially stop, we need to understand what exactly is happening. Why is Trump attacking China, Canada, Mexico? We need to understand the trade side of things. And I have a map here to show, which shows the disparity between imports and exports. The United States is in the dark red, which means that it imports much more than it exports. And so we are, as a nation, consumers. I say we because I live in the United States, but the United States is a consumer. They're not a producer. And that's what Trump is trying to change. And the reason why he's going after the countries like Canada, Mexico, China is because when you look at the U.S. balance of trade and goods by country, you can see that our money is going to those three primary countries, Europe as well, but those are the main areas of target. And so why is Trump doing this? Why is he attacking our friends? Well, that's a big reason why. He's trying to level the playing field. Now that we have somewhat of an understanding of that, I would like to bring in Patrick, also known as Crypto Rookies. We talk on a weekly basis about economics, about the macro, about crypto. All of this has everything to do with each other. Welcome back to the show, Patrick.
It's a pleasure. I think I'm not a macroeconomic expert, but I know the basics. And now that we have access to Grok and some other technology like that, we can get a deeper dive on what's going on.
Any commentary on these two maps that I just showed?
I mean, like I'm pretty old and I used to remember the trade balance of the US was not that skewed in the past. Like back when a lot of products were manufactured in the US, the trade balance was a lot more, I would say, green toward the US because they were exporting a lot more product because they were manufacturing them. And then over the years, I think that they started consuming, as you said, a lot more and importing way more than they were exporting because all of those jobs ended up in another country because it was cheaper. The company moved their manufacture. So it didn't benefit the US at all. It benefited the company that moved on a global stage. But I think right now it's Trump has to fight the deficit on the debt itself of the US and all of the government that is overspending and the fraud and everything that is happening there. But at the same time, he has to fix the trade balance. Nobody has ever tried to fix it so far as far as I know, basically.
Why do you think that nobody has attempted that?
There's conspiracy theory on one side, but overall, companies have been in power. Like some companies are so rich, they can rival like some of the biggest countries in terms of financial strength. So if they decide that they want to focus on profits, they move their manufacturer wherever, give them the cheapest price. It benefits consumer because sometimes it lowers the cost, but at the same time, it doesn't benefit U.S. citizens necessarily. So it enrich the top 1% at the expense of who lives in the U.S. basically, the workforce itself. And I would say that some people were lining their pocket enough, and who fund politicians, it's those companies through lobbying and all kinds of stuff like that. So I think it's a vicious circle that politicians never attempted to want to fight that. But now that Elon Musk and Trump doesn't seem to be relying as much on big company like monetary input for his to become president. Like he got a lot of money from crypto people, from Elon Musk, and a bunch of others that probably are more aligned with fixing the economy in the US. So I think he didn't have the pressure to please those big corporations, maybe. That's supposition. That part I'm not exactly sure, to be honest. But
there's a lot of conspiracies out there. One is that he's intentionally dumping the economy so that way the Fed lowers interest rates, we start printing again, which I think is inevitable. No matter who is in office, that's inevitable. So that's one theory, that he's trying to do this intentionally in order for us to then have this parabolic rise. Because if you look at previous crypto cycles, in order for us to have the altcoin season that we're all accustomed to, it usually requires some form of stimulus, right? We had that in with COVID. I believe the cycle before that, we also experienced money printing or lowering of the interest rates. And so that's one theory. Another theory is that because retail has a 15-year advantage on the institutions, Trump is doing the institutions a favor by suppressing the market so that way they can accumulate more crypto, more digital assets, more Bitcoins.
Those two theories, I'm not sure I believe in them, especially the second one is crashing the entire world economy, like the entire economy, and it affects a lot of other countries. It's not just crypto, crypto is a peanut compared to the stock market. How much, like in the last month, the stock market loss is like 5 trillion or more, something like that. That's
4 trillion, I believe. Yeah, S&P 500 alone, I believe 9%, maybe over 10 at this point, at this pace.
I think it's twice bigger than the crypto market entirely. So I really don't think that's the case for that. And as far as the forcing the end of Powell to lower interest rates, I saw a post on X. I forgot who that was. I think maybe Benjamin Cohen or someone like that. Anyway, and I checked with Grok and made some calculation. Because it's not all the debt of the US that come to maturity this year. It's only a fraction of it. So if you calculate
9 trillion, I believe.
Yeah, but if you lower the interest rate, let's say from 3% down to 1.5, you end up saving maybe 40 billion, 50 billion, roughly in that ballpark. That's really not that much compared to the size of the US in terms of GDP and everything else. So also, I don't think that's really the case there. But if you fit in the trade balance, now we're starting to talk much bigger numbers, because we're talking about like a deficit of 7 trillion from what you saw on the map. So if you crash the economy, you can actually lower you devalue the US currency. Right now, the US currency is very strong, but it has been decreasing for the past few weeks. But the more you decrease it, the more it becomes hard for people outside of the country to export to the US. Because now the cost of goods, like in the US currency, become more expensive. So then you can actually start to push the trade balance a little bit more on one side, because now the goods that are produced in the US become more affordable in comparison to what you have to import because of the devaluation of the currency itself.
Well, but the concern is the opposite, right? The concern is that by implementing these strategies that we're going to create more inflation.
With the tariff, yes, for short time, but not necessarily for the long term. He basically has 4 years to fix the trade balance. He doesn't have to make it equal, but he has to slow down the bleeding. And I think even if it takes a year, I think that might be acceptable.
Well, are you seeing a scenario where our cycle essentially is delayed by a year?
No, and I'll explain why. But I think the economy and the US currency devaluation will probably last a year. I looked at it, and the last time Trump was in power, the US currency got devalued, and it took about a year before it reached the bottom. So, and it started around March also. So I think in terms of this might be aligned, because I think maybe he knew about this back then, and now he's trying to implement the same thing, but maybe slightly differently. But you achieve more than just the devaluation of the dollar with this approach. Is that at the same time that you devalue the dollar, you crash the economy, you do end up lowering the interest rates. But it's not just that you want to refinance the debt of the US, is that lowering the interest rate also reduce and devalue the US dollar, because there's less demand for treasury bonds and for government bonds overall. And all of that stuff has an impact. China is one of the biggest holder of government bond from the US. So now that if you devalue your dollar, you kind of, it's maybe a negotiation tactic in the background with China, because you're basically devaluing how much you owe them. And right now, you've seen it like a month ago, China, and for the past 6 months, maybe even, they went pretty hard on the money printing. So they are devaluing their own currency. So maybe Trump wants to rebalance things, because then if they devalue their own currency, then the goods that they produce and end up being cheaper to sell to the US, and then people will probably not want to buy from the US at all for competing goods. So I think all of this may be happening in the background and people don't realize this, but I think you are attacking China in many different directions by interest rate reduction. And it's not just about your refinancing of your debt, it's just that trade balance that end up being affected massively. Not only that, but let's say that you're Apple and you're manufacturing a phone outside of the US. If you devalue the dollar, that means that when they want to sell their phone to the US, they either have to jack up the price or they have to accept that they sell at a lower price because of the devaluation of the dollar itself. On the other hand, if you move your manufacturer to the US, because you devalue the dollar, American citizens that are paid, let's say, minimum of $20 an hour, it's cheaper now because you devalue the dollar itself. Let's say that you devalue the dollar 14%. It does add up when you're a company that work all over the world. So now that math actually makes sense to bring back manufacturing in the US because you're lowering the cost of producing from many different angles. And then you can sell without the tariff, you bypass the tariff. So maybe the tariff is not the only way that is arranging all of those aspects together in order to make it better for companies to move back manufacturing to the US.
One of the things that happened...
The tariff is just icing on the cake, basically.
One of the things that happened last cycle, Patrick, was that we had COVID, which created stimulus, as I mentioned, and yes, the S&P 500 experienced a 35% decline. Right now, we're only at about a 9-10%. Do you think we need to see another 25% in order for us to have some type of a change from a monetary policy?
Yeah, that is possible. I'm not exactly sure. But the thing is that the global M2 supply has been increasing for...
I can pull up the screen here that shows the U.S. national debt over 36 trillion, and the U.S. M2 money supply is over 21 trillion.
Yeah. So let's think the global M2 supply, that's the bottom pane, it started to tick up on January 13th. And typically speaking, there's a lag of about 70 days or so before it starts to pump the price of Bitcoin. So if that's the case, 70 days means that you end up about around this orange line that I put on the screen. So that means that it's around the end of March, which is basically in less than 2 weeks. And next week there's the FOMC meeting. So it's not impossible that even next week we start seeing some the price of Bitcoin to start ticking up again. I know that it's against a lot of influencers what they're talking about, that we're in a significant downtrend and maybe it's not over yet. And as you said, the US stock market will have priority over all of that, what is happening. So we'll see what happens, but the DXY, which is the US currency, is has been declining quite a lot also. But this could take a year. From the last time Trump was in power, it took about a year before it reached the bottom. So, and it went down 14%. But overall, that has also benefit, in theory, the risk assets. And then the global M2 supply is increasing. That also has a high correlation to Bitcoin, but with a delay of about 70 days. So we'll see what happens, but it's possible the NASDAQ keep decreasing and the S&P 500. But from my calculation, if the money that the US could make from a better trade deal overall might be around $150 billion a year, as opposed if it's just refinancing of the debt and you're saving $50 billion. The bigger chunk of money to get is really attacking the trade balance. So in which case then it's not just the refinancing. I think the refinancing is just a little bit of icing on top of everything. But I think it's not the main reason why Trump is doing what he's doing.
So you mentioned the M2 supply, and you said that there was about a 7-8 week delay, which would put us in a couple of weeks from now. And next week we have the FOMC meeting. But real quick, just wanted to share this because in order for us to have a change, I mean, you need to see a decrease in rates, right? But based on the probability, that's not what it's looking like. So do you really see a change after next week's meeting?
We'll see, because even in the absence of a rate cut, depending on what Powell say and the way that he phrases his sentences, there could be a pump regardless, because maybe it's going to be expected that the next FOMC meeting, the rate will go back up. The market is forward looking, and just an extra month and a half, I think it's acceptable. It depends what he says, but regardless of the interest rates, the global M2 supply, on the January 13th started to really climb up. And usually it takes time for that money to trickle down the economy. But the thing, I think it's not impossible that we start to see a tick up. Otherwise, it could be taking longer, because those trade deals, especially with China, will probably take way more than a few months to negotiate fairly. Canada, it seems like they're folding. Mexico probably also. But it's going to take time, and we'll see what happens with the war in Ukraine. Maybe it comes to a close. There could be a lot of catalysts that will pump the market short term, regardless if there's a rate cut or not.
So I'm going to make a comparison again from now to the last cycle. Last cycle, we had also money printing, but that money printing was a lot different because that money printing was going directly to the consumer. And so when you have money given to the retail, then you can expect an alt season, right? But in this particular case, consumers are not getting the money, are they?
It will take time to trickle in the end of the end users, that's for sure. So I think it's much more likely that it's the ETF type of asset, like we discussed, Bitcoin, Ethereum, maybe Solana and stuff like that, that will get a nice pump from the institutional buyers. I think it's much more likely to end up playing that way.
It's just interesting because everything is winding up to be, it just feels more like 2020, not 2021, right? Unless we're looking at the previous cycle, which I know that there are a lot of experts out there that do say that it correlates more with what happened in 2017, which remains to be seen. But we only see the institutions right now are the ones having all the fun.
It's true. And I think for me, at this point, the alt bull run, I think it has been delayed significantly. Maybe it's going to come much later. So we'll see what happens to the economy in the next year. But I would say it's even more likely now that we don't see a bear market coming anytime soon. I think the bear market is already right now for the alts, definitely. And maybe we will not have any bear market on Bitcoin at all, maybe. Maybe it's going to go on a rampage for the next 8 years. We discussed that before. I think it's not impossible.
So what is your prediction for the end of the year, Patrick, if you had to take a guess?
I don't think I've changed my target. I would still aim for maybe 240K. It's still not impossible. We reach 200K by April or May. Let's see what happens in 2 weeks if we really start to take up. Like we've seen MicroStrategy, they are working on another $21 billion to buy Bitcoin. Just MicroStrategy alone can buy all of the mining output for the next year. And then, the federal government has approved the strategic Bitcoin reserves, but they are not buying Bitcoin at the moment, but they have a bill to buy. Meanwhile, the individual states, Texas is the most advanced. They have 4 steps that passed out of probably 6 that is required in order for this to be approved. And that would be an extra, maybe $500 million per year of buying Bitcoin. Utah is on the 3rd step out of 6, Arizona 2 out of 6. So we'll see what happens, but if you count MicroStrategy, all of those individual states, possibly some of them will get into, then it will be more likely that the other will join in. And then other countries in the world that do the same. It could happen relatively quickly. So that's why I think 200K Bitcoin by May is still achievable. Even in the worst of the economy, this could actually become a safe haven for those countries that want to accumulate and all that stuff. So I don't know if the price of Bitcoin will go down that much, and I would not be surprised if the price of Bitcoin would go up, even though the S&P 500 would go down further down and all that stuff. And one of the reasons why this happened is that if all of this is true, that Trump is really attacking the trade balance, I think short term, it's going to probably cause more inflation and all that stuff. So if the US want to help the citizens, I think getting into a Bitcoin reserve with a price that is increasing because of all those institutions, and I think if you crash your US dollar, this is a way to save some money, basically, having that extra treasury that is increasing in value, because now you're crashing the dollar, but then this may be increasing, so you are offsetting some of your losses, basically. So I think depending on how they position that, they could benefit US citizens by having that treasury to back the economy in that sense. It's not going to be huge, but maybe it's an extra $50 billion. So if they manage to get an extra 150 billion from the better trade balance and all that stuff, this maybe offsets some of the problem with the inflation that could come.
Patrick, thanks so much for all the insights. We dove into the economics, crypto, I mean, everything, and it's all related. Politics, all of it is related. So always a pleasure to connect and talk about these things. I'll include your links in the description below. And if you're watching and you found this video helpful, please subscribe to the channel, like the video, give it a thumbs up, and we'll catch you guys in the next one.